Hook. I analyzed a Bitcoin Treasury company trading at 3.2 mNAV that looked perfect on paper. BTC holdings, 2,400 Bitcoin. BTC yield over the trailing 6 months, 41%. Debt to NAV ratio, manageable, under 0.4x. I almost bought in. Then I found their convertible note structure. And buried inside was a reset clause that could dilute shareholders by up to 30% the moment Bitcoin dropped 20%. The premium evaporated in my head instantly. That one detail saved me from paying 3 times the underlying Bitcoin value for a stock that could crater faster than Bitcoin itself on a bad week. This is the analysis most retail investors never run. Today, I'm ranking 5 Bitcoin Treasury companies: Metaplanet, Semler Scientific, and 3 newer entrants, by the metrics that actually matter: mNAV, BTC yield, leverage, and dilution risk. I'll tell you which premiums are justified and which ones are a trap. Stay with me. This will be the most useful 9 minutes you spend today. Section 1. What mNAV actually measures and what it misses. Let's start with the metric everyone cites, but half the people using it don't fully understand. mNAV, or market cap to net asset value, is simple on the surface. You take a company's market cap, divide it by the Bitcoin it holds, multiplied by the current Bitcoin price, and you get a multiplier. A 2x mNAV means you're paying $2 for every $1 of Bitcoin on that balance sheet. So why would anyone pay 2x? 3 legitimate reasons. First, the company is actively growing its Bitcoin per share faster than dilution. That's what we call positive BTC yield. Second, the operational business generates cash that gets recycled into more Bitcoin. Third, the equity structure gives access to leverage that individual investors can't replicate cheaply, like ATM offerings or low-coupon convertible debt priced off institutional demand. Here's what mNAV misses. It tells you nothing about the quality of the debt behind the holdings, nothing about the dilution trajectory, and nothing about whether management is actually disciplined or just riding the Bitcoin price up while quietly issuing shares. 2 companies at 2x mNAV can be completely different investments. That's the whole point of today's video. We're going underneath the number. The formula I use: BTC per share trend over rolling 90 days. If BTC per share is rising, management is accretive. If it's flat or falling, the premium is being paid for a story, not a result. Section 2. Metaplanet versus Semler. Same premium, different story. As of this week, both Metaplanet and Semler Scientific are trading in the 1.8x to 2.1x mNAV range. On a screener, they look identical. They are not. Metaplanet, the Tokyo-listed company, holds approximately 15,500 Bitcoin as of Q2 2026. They've been issuing yen-denominated bonds at near zero coupon rates, a direct product of Japan's rate environment. Their cost of debt is structurally lower than almost any dollar-denominated peer. That matters enormously. They're leveraging cheap capital to buy an asset appreciating in dollar terms while paying interest in a debasing currency. That's a genuine structural advantage baked into their premium. Their trailing 6-month BTC yield, meaning the percentage growth in Bitcoin per share, sits around 52%. That's not just accumulation. That's accretive accumulation. They're growing the Bitcoin per diluted share. The premium of roughly 2x mNAV, in my view, is defensible precisely because of this yen debt arbitrage and the BTC yield backing it up. Semler Scientific is a different animal. They hold approximately 4,300 Bitcoin. Their core business is a medical technology company, the QuantaFlo device, and Bitcoin is genuinely secondary. Their leverage is conservative, minimal convertible debt, no aggressive ATM program. That restraint means they don't carry the dilution risk of more aggressive peers. But here's the nuance. Semler's BTC yield over the same trailing 6-month period is around 18%. They're growing Bitcoin per share, but slowly. Their premium is being sustained largely by scarcity. There aren't many small cap, low leverage Bitcoin Treasury options for institutional mandates that need that profile. If you want conservative Bitcoin equity exposure, Semler's premium makes sense. If you want aggressive accretion, it doesn't. Two companies, same mNAV range, completely different justifications